case that has everything except an arrest, and that struck some as odd.
Ever felt like the big banks operate by a different set of rules? Like when you're nickel and dimed for a minor overdraft but they seem to get away with anything? Well, buckle up, because today we're diving into the shocking world where HSBC got caught red-handed laundering money for Mexican drug cartels. Stick with us as we unravel how deep this rabbit hole goes and, more importantly, what it means for your safety and your wallet. Stay tuned for the full story. Before we begin, hit that like and subscribe button, or you might just find your bank account suspiciously cleaned by a not-so-legal laundry service. In 2010, a seismic shift was underway in the scrutiny of global banking practices. It was a routine, perhaps unremarkable day when the United States Senate Permanent Subcommittee on Investigations, under the stewardship of Senator Carl Levin, set its sights on one of the world's largest banking and financial services organizations, HSBC. The inquiry was no mere tick-box exercise. What began as a routine audit soon unraveled a complex tapestry of regulatory neglect and potential complicity in criminal enterprise. The Senate subcommittee's mandate was clear: to probe and shine a light on the inner workings of the bank, to determine if it was, in fact, enabling illegal money to wash through the American financial system unchecked. Senator Levin and his committee were digging where few had dared to dig before. There were whispers, of course, rumblings of money crossing borders with too few questions asked, of accounts operating below the radar, and of an intricate web of financial transfers that seemed to evade the usual scrutiny. The stakes were high, and the committee members knew this. They would need to delve deep into the bank's operations, examining and cross-examining mountains of transactions, internal emails, and company records, searching for the actionable evidence that could prove the bank hadn't just failed in its regulatory duties, but had become, potentially, a hub for laundering illicit funds. As the inquiry gained pace, it became evident that this wasn't just a matter of catching one or two rogue employees off guard. No, this was larger. It was systemic, and it pointed towards a deep-seated vulnerability in the bank's defenses against money laundering, a vulnerability that seemed to be exploited repeatedly. The committee's work, it was becoming clear, was laying the groundwork for what would be a landmark case in banking oversight. A careful dance between regulation and accusation was at play, and HSBC, a titan of the industry, was center stage under the unwavering gaze of the United States Senate. In the summer of 2012, the Senate's inquiry had reached a critical juncture. The resultant report, hundreds of pages thick, detailed with precision how HSBC had breached significant anti-money laundering rules. The findings were damning, illustrating a bank that had not merely overlooked but had facilitated money laundering on an unthinkable scale. A number closer to fiction than reality was placed on the record: $7 billion. Funneled through HSBC's Mexican operations, this enormous sum had a dark shadow cast over it. With links to drug proceeds, the numbers spoke of a systematic failure within the bank to prevent illicit funds from seeping into the legitimate financial system, a system trusted by millions. The Senate's report outlined how HSBC's affiliates skirted around U.S. safeguards designed to protect the financial system from the taint of illegal money. It wasn't just that protocols had been ignored. In some cases, they were manipulated to move questionable funds without triggering alarms. Rogue states and dangerous actors had seemingly exploited these weaknesses, moving money through HSBC's American heart. What stood out was not the complexity, but the brazen nature of these transactions. Billions were moved in broad daylight through wire transfers, travelers' checks, and a profound neglect of due diligence. The report captured a narrative not just of a system that failed, but of a culture that had, in effect, become too risk-prone, largely ignoring the flags raised by their own money laundering detection work. As more findings from the report became public, it painted a picture of a bank that had played fast and loose with the rules, prioritizing business and profit over legal and ethical standards. As industry watchdogs processed the scope of the issue, one thing was clear: these revelations would leave an indelible mark on HSBC and would force the financial world to reckon with the robustness of international anti-money laundering efforts. As the investigation dug deeper, the Senate's report highlighted a troubling patchwork of lax anti-money laundering practices within HSBC. The magnitude of indifference towards these measures was shocking to many. The report did not mince words. It laid bare a culture that seemed to have played roulette with compliance. HSBC's failure to act on warnings and to halt suspicious transactions wasn't just an oversight, it was systemic. The bank had allowed a climate where U.S. safeguard rules were at times disregarded entirely. Employees bypassed filters and purposely structured transactions to avoid alerting authorities, willfully blurring the lines of legal operations. It was a set of protocols on paper that in practice seemed hardly worth the paper they were printed on. The report outlined multiple instances where HSBC's own internal audits and controls had identified significant risks in their global operations, yet these red flags were often ignored or only superficially addressed. Moreover, the bank had processed transactions for countries under U.S. sanctions, using clever, circuitous routes to conceal the movement of money into forbidden territories. It was as if the very measures designed to block transactions involving terror states and parties had been treated as hurdles to clear, rather than barriers to enforce. These practices pointed to a bigger issue than negligence. It revealed a fundamental weakness within HSBC's anti-money laundering system, a weakness that had allowed unethical practices to flourish while corporate governance appeared to turn a blind eye. It was clear that HSBC would need to rethink its approach, retool its systems, and reprioritize compliance to regain trust and stability in the aftermath of this scandal. In December of 2012, the tremors caused by the Senate's reports translated into a forceful judicial response. HSBC found itself at the center of an unprecedented settlement. The bank agreed to pay a staggering $1.9 billion penalty. To contextualize this figure, it wasn't just a financial slap on the wrist. It was one of the heftiest settlements in banking violations history up to that point. The penalties were potent and symbolized a broader effort to hold the bank accountable. But enforcement went beyond just monetary repercussions. It was about ensuring such a breach of trust couldn't happen again. The bank was mandated to take vigorous actions, a series of measures aimed at overhauling its anti-money laundering practices. These measures would see HSBC enter into a deferred prosecution agreement with the Justice Department, effectively putting the bank on probation. At the core of this agreement were specific, actionable steps to reimagine and fortify its compliance infrastructure. The bank was required to introduce stringent controls, overhaul its internal oversight, and implement robust staff training programs. Furthermore, the institution would face audits and be closely monitored by an independent compliance authority to guarantee adherence to U.S. banking regulations and to deter any potential for future malpractice. This settlement was not just a punitive action resulting from past mistakes. It was, in part, a commitment to reform. As the financial community absorbed the gravity of this situation, a consensus emerged that transparency and compliance could no longer be sidelined in pursuit of profit. They must be cornerstones of any reputable banking institution's operations moving forward. As the dust began to settle on the financial penalties imposed on HSBC and their agreed commitment to reform, a curious narrative began to develop, a piece of the puzzle that left many observers unsettled. Despite the wealth of evidence and the severity of the bank's systemic failures, there was a notable absence of criminal charges against any HSBC officers or personnel. In the public discourse, questions loomed. If not for such grand-scale facilitation of money laundering, then what would it take for individual accountability to be actioned? The answer from the U.S. Department of Justice was tinged with pragmatism, albeit contentious. They expressed a profound concern about the ripple effects an indictment might have, a concern that putting corporate executives in the dock could potentially destabilize the broader global financial system. This reasoning was rooted in a chilling reality check from the recent past. The collapse of the financial firm Arthur Andersen in the wake of the Enron scandal, which had resulted in a significant loss of jobs and a hit to investor confidence. The decision not to pursue criminal charges against HSBC personnel, therefore, was a calculated one, reflecting the precarious balance between the pursuit of justice and safeguarding economic stability. In defense of their position, the Justice Department pointed to the reforms and fines as a sufficiently robust response. For many, though, this was a difficult pill to swallow, leading to a broader conversation about the principle of too big to fail, and whether financial institutions and their leaders operated above the reach of the law, shielded by their integral role in the global economy. In the aftermath of the scandal and the hefty fines that followed, HSBC embarked on a mission to reshape its very corporate ethos, especially concerning anti-money laundering practices. The bank undertook a sweeping overhaul of its AML systems and leadership. Changes were felt from the boardroom down, as new personnel, with fresh commitments to regulatory compliance and ethical practices, filled key positions. This shakeup was not merely cosmetic. The bank invested massively in upgrading its monitoring technology, training programs, and due diligence procedures. Every transaction now faced greater scrutiny, every suspicious account more rigorous checks. The shift was profound. HSBC was not just changing systems but seeking to transform its culture, repositioning compliance from a back-office function to a cornerstone of its daily banking operations. Meanwhile, the echoes of the scandal reverberated far beyond the walls of HSBC. The financial world buzzed with discussions concerning the long-term impact on the bank's reputation. Would clients and investors remain loyal to an institution embroiled in such controversy, or would they take their business elsewhere to competitors seemingly untainted by similar failings? This debate spilled over into a broader global analysis of money laundering regulations. Legal experts, industry watchdogs, and policymakers re-examined and questioned the robustness of current laws. New conversations began, aimed at strengthening international regulations to close the gaps that had allowed dirty money to flow so effortlessly across borders. HSBC's journey from a money laundering scandal to necessary reform was watched closely by financial institutions worldwide, serving as a stern reminder and a cautionary tale. Compliance can never be an afterthought in banking. It is imperative not only for the legal and ethical standing of a bank but also for the protection and integrity of the entire global financial system. This wasn't just a chapter closed in the annals of financial misdeeds. It was a new chapter opening on how banks must conduct business in a world where the flow of capital is as global and as scrutinized as ever. The story of HSBC's brush with money laundering had left an indelible mark, providing lessons that would resonate within banking halls for years to come. Thanks for diving into the shocking world of HSBC's money laundering scandal with us. Remember to stay informed by liking and subscribing to our channel for future videos. Your support keeps us making content that matters. See you next time.